Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. On the hourly chart, the GBPUSD pair reversed in favor of the pound on Tuesday and consolidated above the 31.99 32.14 resistance zone. Thus, the upward movement may continue toward the resistance level of 33.41, 33.52. A rebound of quotes from these levels would favor the US dollar and lead to some decline toward the 32.14 level. Consolidation of the pair above these levels would increase the chances of continued growth toward the next resistance level, a 1.3437 and 34.65. The wave situation has once again turned to bearish. The last completed upward wave exceeded the previous peak by only a few points, while the new downward wave confidently broke the previous low. The news background remains weak for the pound, and geopolitics gives bears an almost complete advantage in the market. The war in Iran remains the main reason for the strengthening of the US currency in recent months. Bulls can only hope for the end of the war in the Middle East, a drop in oil prices, and a ceasefire by all parties involved in the conflict. On the 4-hour chart, the pair consolidated above the descending trend channel, which gave the bulls absolutely nothing. At the moment, I would recommend focusing on the hourly chart, since the graphical picture on the 4-hour chart is not the most clear. No emergent divergences are observed today on any indicator. And we're starting with pound sterling dollar pair with Din Lao. During Tuesday, the EURUSD pair reversed in favor of the euro and rose to the 100% corrective level at 1.1577. Consolidation above this level will favor further growth toward the next Fibonacci level of 76% at 1.1696. A rebound from the 1577 will allow traders to expect a reversal in favor of the US dollar and a resumption of the decline toward the 127% corrective level at 1.1440. The wave situation on the hourly chart is becoming quite complex. The last completed upward wave exceeded the peak of the previous wave by only a few points, while the new downward wave broke the previous low. Thus, the trend has once again shifted to bearish. But as early as today or tomorrow, a new upward wave may break the previous peak. Donald Trump's actions in the Middle East have triggered large-scale military operations and an energy crisis in the region, which has provided unprecedented support for the dollar. On the 4-hour chart, the pair declined to the 100% corrective level at 1474, rebounded from it, and reversed in favor of the euro, with consolidation above the descending trend channel. As the bearish trend over, thus the upward movement may continue in the near term toward the Fibonacci levels of 76% at 1617 and 61 at 1.1706. No emergent divergences are observed in any indicator. That's all for today. See you online soon.